Hello everyone, in this video we're going over a recent investment article published on NASDAQ InvestorPlace by Makris to talk about 3 myths to be aware of about Lucid Motors and its merger with CCIV. A link to that article is provided in the description, and we'll review the key highlights from the article, which provides an interesting perspective into Lucid Motors as the company is merely days away from merger with CCIV. For reference, InvestorPlace is one of America's largest, longest-standing independent financial research firms that publishes detailed research and recommendations for self-directed investors, financial advisors, and money managers. In 2021, Churchill Capital became the most popular stock for momentum investors looking to replicate the success of Tesla. Peter Rawlinson, the CEO and CTO of Lucid, was the chief engineer for Tesla's Model S electric vehicle and the company's vice president of vehicle engineering. In an interview with Reuters, Peter Rawlinson said the EV maker plans to launch a rival to Tesla's Model 3 in 2024 or 2025. The sub $70,000 electric vehicle, the Luxury Air, will launch in 2022, followed by an SUV in 2023 called the Gravity. Though note that Lucid Motors' first electric car, the Luxury Air, won't go in production now until late 2021, later than the spring 2021 launch initially planned. CCIV stock is starting to look less like a tech stock and more like a meme stock. But there's a silver lining here. Binary stocks like this could present massive trading opportunities. Let us take a look at the top 3 misconceptions around Lucid Motors stock according to the article. Myth number 1. Tesla didn't have material revenues at the time it became public either. That is not quite true. Tesla did have some revenue. Also, there's clearly a massive difference in the initial valuation of the two companies. Tesla was priced reasonably at the time it went public, whereas Lucid Motor isn't. We have way too much retail money pumping into a red-hot special purpose acquisition company SPAC IPO market. Tesla's June 2010 IPO priced 13.3 million shares of common stock at $17 per share. That's a market capitalization of only $226 million. Now, based on reported 2011 revenue of $204 million, the market valued newly public Tesla approximately 1.1 times forward sales. Lucid, in contrast, is coming to market at an implied valuation of $41 billion, based on approximate 1.6 million shares outstanding times the pricing of $25.52. That's a huge difference compared to Tesla. Based on Lucid's implied valuation of $41 billion and a 2022 sales estimate of $2 billion, these numbers imply a multiple of 20.5 times forward sales, a massive price tag compared to Tesla's IPO valuation. Lucid Motors myth number 2. There's lots of demand for Lucid cars. Just look at the reservations. Well, it is true that the car maker does have plenty of reservations. When it comes to investing, this kind of thinking is downright dangerous. At the end of the day, reservations do not equate to revenues. Making prototypes and designing things are wholly different skill sets than ramping up volume production. Lucid Motors myth number 3. Lucid has a great management team, so it's bound to succeed. While there is no denying to the importance of strong and seasoned management board, Lucid's ownership and board structure is especially important because CCIV shareholders will own only a minority interest in Lucid Motors, which is about 19.1%. A major ownership stake of the company will be owned by Saudi Arabia's sovereign wealth fund or public investment fund. What's more, the company's chairman, former Dow Chemical chief executive Andrew Liveris, also serves as an operating partner at CCIV. In other words, he plays a role on both sides of the transaction, which can be a conflict of interest. Also, worth pointing out that a few years ago, Liveris was under a 3-year investigation by the U.S. Securities and Exchange Commission, SEC, which found that Dow Chemical had failed to properly disclose around $3 million in perks for former chief executive Andrew Liveris, ranging from personal use of company aircraft to sporting events and dues that Dow paid to a charity, Liveris Charity. As for me personally, I'm not invested in CCIV at this time and do not plan to necessarily buy shares of Lucid Motors merger at current valuation. However, I'm keenly following the news around the stock as I might start a position at the right time later on. Are you currently invested in CCIV or plan to buy shares of Lucid Motors stock post-merger? Let us know in the comment section down below. If you'd like to learn more about investing in the stock market and following the latest news about hot stocks, including penny stocks, growth stocks, ETF investing, SPACs, and dividend stocks, don't forget to subscribe to our channel. Here on Momentum Finance, we post several videos every week about investing and financial freedom. I appreciate it if you can give this video a thumbs up, and I hope to see you next time.